The United States Agency for International Development, USAID, via its Market Linkages project, says it has established that transaction costs associated with commodity trade is responsible for the food deficit across parts of the continent.
So if you can move your grains or any other marketing commodity into different markets of a deficit, you will reduce the price dip at harvest. One of the big issues in interregional trade in Africa, and particularly in East Africa and the regions we're looking at, is the transaction cost. The transaction costs are incredibly high. If you compare the cost of moving grain between Uganda and Kampala and Nairobi, it's incredibly expensive compared to moving the grain from South Africa to Nairobi by boat, or even better, from America to Kenya by boat.
It also says that economic blocs such as the East African Community, the Common Market for East and Southern Africa, COMESA, and SADC have not aggressively boosted the capacities of their farmers to expand production and leverage their gross domestic products.
It's a great move by all the governments to release trade restrictions, to encourage trade to take place, to make things more transparent and to formalize trades, as I mentioned earlier. In that way we get economies of scale, transaction cost comes down, and trade becomes more efficient, as it does in other trading blocs.
The agency also, through the Competitiveness and Trade Expansion Program, is pushing for farmer associations to scale up aggregate volumes into the market by improving crop handling and facilities.
The grant program that we have, USAID has got a $5.7 million grant fund, which different organizations can apply. You can be a farmers organization, you can be a trader, you can be a processor, but all of them have to show integration of farmers, of aggregation and bulking of commodity. Because at the end of the day, what we have here is a supply chain with points of value in it.
Currently, intra-East Africa trade for Uganda in particular is generating a turnover of $2.7 billion per year, according to the Export Promotions Board. Consequently, it's being observed that it's possible to raise this threshold by overdressing transaction and related costs to the farmers and produce dealers alike. Reina Ojen, NTV Business.